Hello, everybody. Joshua Hayes of BigWaveTrading.com. Okay, so for these weekend video lessons, we basically only focus on the SPY, so we will continue with that theme. What you see here, I want to first off mention to everybody that all that matters to me is price. Price is what pays. I use volume as confirmation. Moving averages help align me in the direction of the overall trend. So all of the indicators that you see below here, they do not cause me any analysis paralysis. They are not overwhelming to me. They're just helpful guides. But ultimately, price is all that matters. So just keep that in mind. If you guys are like, oh my God, look at all the indicators on this chart. Listen, they're there, but ultimately, this is really all I'm watching. And this is just telling me, hey, how do we look right now? So with that in mind, we're going to start with the monthly look on the SPY. I'm not a professional, obviously, as you can tell, content video producer. So I just have bullet points, and we're just going to go down the line on them on my sheet of paper that I have next to my computer. And we'll see if I can hit all the points I want to get. But first, starting off with the monthly view of the SPY. Overall, from the 2009 lows, have we seen any change of the major uptrend? No. We have the 200, 150, 150 still trending higher. Now, short term, we do have a problem. The 9 has crossed below the 21. That's only happened back in 2000 and back in 2007, 2009. On top of that, I want everybody to keep in mind that TTM trend momentum indicator went bearish in 2001, stayed that way throughout 2003. That was a secular bear. It went negative in 2008, stayed that way throughout 2009. That was a secular bear. And as you can clearly see here on a monthly time frame, we have had that happen just like we saw in 2000 and 2008. So if we've turned and shifted into a secular bear, I think we'll have time. If we have, quote, quote, bottomed. The shifts in sentiment on social media and Twitter, I'll tell you what. So getting old, I'm fine with. It's going to happen. Everybody gets old. Everybody dies. What are you going to do? Sometimes, though, I miss not being young anymore because intraday, these young kids, boy, they trade like I used to. Whenever I had good setups, even if they weren't good, still I could press it because you have time to make up for mistakes. You don't have time to make up mistakes before. So I still like to get granular, modulate my position size, even when it looks like it's a for sure slam dunk setup intraday. So that's about the only thing I wish I could take back. If you can actually be younger again, and just remind everybody, youth is wasted on the young. Even if you could go back in time, it wouldn't help. But the good news about getting older in the market is you don't really have these shifts based on each day that price changes. So that's why we're looking at the big long-term view. And while the monthly trend is higher, we have indications that this cyclical bear that we are still currently in, per my definition, the weekly 200 SMA. On the weekly 200 SMA, you can see here, this is whenever you hit secular downtrends. When you go below the 200 weekly SMA, fail to get back above, break to new lows, secular downtrend, secular downtrend. Are we below the 200 weekly SMA on the SPY? Have we failed on the way back up and rolled over? No. So as of right now, based on price, we have a cyclical bear market. It's not secular yet. But if we look at the monthly time frame, we're looking like it could turn that way. And just to let you guys know, all throughout December in 2021, I was calling 2022 the year of the day trader, active trader. Even if you swing, you got to be quick at taking profits. And I'm going to stick to my theme that 2023 is going to be the year of the recession. That being said, markets bottom before recessions end. Markets bottom during recession. So keep that in mind. So in the monthly time frame, we do have some things to worry about. We've gone red on the TSV and red on the MACD, But as you can see, sticking with that cyclical versus secular concept, we went red in the Chaikin money flow back here. We went red for a very short period of time near the end, telling you that it's secular. We still haven't gone there yet. So it's a bit of a mixed bag. What do you think that means, probably? I think I know what it means. Chop it up. It's the theme that I've had for the past few months. Those that are too bearish here and those that are too bullish here, they're going to probably be disappointed. So as we go down to the weekly time frame, we can see we're holding that 200 weekly SMA. Now, you will see here, I've told you guys, you break below it, fail, roll back over, secular bear. Break below it, roll back over, break below, secular bear. In 2020, you'll notice we got below it. Did we fail at the 200 and roll over? No. Instead, we got a follow through day and we were good to go. So in the weekly time frame, this overall doesn't look good. We're bearish in the CMF, bearish in the TSV, bearish in the MACD, but nothing is dire yet. So now let's get down to the daily. On Friday, we had a very powerful follow-through day. Day 1 of the rally attempt, 2, 3, 4, 5, 6, happening on day 7. The best rally follow-through days happen day 4 through day 7. Strong volume, pocket pivot point signal, TTM momentum squeeze. We call this a slingshot. We got some green on our indicators. CMF is still red, though. Has anything really changed following this follow-through day? Did new highs expand and trounce new lows following Friday's session? No. Oddly enough, these 3 past sessions, even with Friday's powerful follow-through day, new lows trounce new highs. Doesn't mean that it can't get better as we move along, but we're not there yet. It's a good stepping stone. A follow-through day will probably have us rally, and I got to be honest, guys, we easily have room to the 50, to the 100, to the 150, and if you think we can't get to the 200 SMA, I'll remind you about the June rally, which, by the way, happened because we all thought the Fed was going to pivot. We're all starting to think maybe the Fed is going to pivot. They haven't yet, and until they do, there is no bottom, as far as I'm concerned. Until the VIX is over 40. Oh, let's go into show. I really doubt we have a bottom. Much less, to be honest with you, once you are in a long-term bear market, you're normally going to need to see a spike well beyond 40, 50, 60. Look at the last time in 2020, you got all the way to 80s. So I really have a tough time thinking that this is ultimately the bottom. Now, I turned all of these off so I could just show you the price chart. Even if you think that this is ultimately a bottom here, what is our leading group? Oil stocks, oil names. I only have 2 CANSLIM swing positions currently. TNK, an oil shipper, and DVN, an oil stock. And I'm only bullish on this sector based on how the ETF of the industry group looks. There's other good stocks out there. HQY breaking out, STLD breaking out. But in terms of a group move with leading stocks, it's oil. Does that scream the start of a new bull market? No. So not only, these are the most important levels, are these moving averages. But I want to add Fibonacci retracement levels from this low to this high to this low. And I want to show you anchored VWAPs at the most clear resistance levels, along with where resistance should be at these levels, while at the same time giving you support levels to work with. Now, I didn't give you as many support levels because what I want to show you is, even if you believe that we have bottomed here, look at all the resistance overhead. Not only do you have all of these moving averages, you have all of these anchored VWAPs from the key recent highs, then look at all these Fibonacci retracement levels that are also going to act as areas of resistance. And I didn't even add previous support levels that would act as resistance. Now, on the support side, we can start putting in some key levels here, So we can start seeing here, ultimately putting my neck out on the line. I've always thought this market was going to bottom around somewhere around SPY 340. You guys know that I've been waiting for a close of SPY at 350 to do the 50% add to the long-term portfolios. Been waiting for it for this downtrend, been waiting for it for this downtrend, but yet I can never seem to get it. Kind of tells me that we're probably at a major support level. Will it hold into 2023 once we start seeing the interest rates work its way through the economy? I do not know. All I know that as of right now, on the downside, my game plan has not changed for the long-term portfolios. SPY 350, 50% of the cash that I have in these long-term portfolios, that gets placed to work. SPY 320, more gets placed to work. SPY 300, more. SPY 280, more. And if for some amazing miracle SPY hits 250, all in, on the way down. To get all in without SPY 350 happening, once again, I need to see that Fed pivot, that fear capitulation via the VIX. And I'll tell you what, the most important thing that you normally see after a bear market has started, you normally need to see equity outflows from ETFs and mutual funds. And normally you need to see about a third come out. Guys, I don't know if you check the equity inflows, outflows. They're only starting to come out, but we're not even 5% off the equity inflows highs. So there's still a lot of work to do if you think that we have not bottomed yet, which I still don't think that we have. I believe that we have a counter trend rally in the context of a long-term downtrending market. Could that counter trend rally turn into something more? Absolutely. Will I be monitoring the best stocks with the best earnings and sales growth, leading sectors, leading stocks, leading industry groups that have innovative, new, fresh products that are beating on the top and bottom line, raising estimates? Absolutely. But we overall really don't have that condition. So that's it for the SPY, really. Downtrend, going through my checkpoints now. Downtrend overall, counter trend rally. If there's anything that's bullish for this counter trend rally continuing on, seasonality is turning positive. We have gotten through, once October ends, we will be entering a bullish period of the market that lasts normally into February. I still plan on going into the quarterly portfolios, but I've been thinking the 100% quarterly portfolio operations, even in a bullish Q4, is probably only best to do in a bullish, uptrending, cyclical bull market. So in that quarterly portfolio, I'm still planning on taking, whenever I reconstitute these quarterly portfolios in November, I still plan on taking those 20 names. I have two portfolios. One's more growth-oriented. One's more big cap, I guess you could say, oriented. We're just going to do 50% of those portfolios moving on as we head into positive seasonality. We'll see if the earnings can't keep beating, but we have a very earnings-heavy week next week. And I just checked the Fed's balance sheet. They're still selling assets off their balance sheet. I know that they're talking only 50 basis points in December, but there's been no official Fed pivot. There's no fear out there. We're going to really show you this chart, the TMV. I've told you guys that this thing is starting to get very parabolic. One of the reasons why I think we could have a big bounce in the market all year long, whenever this bounce happened in March and this bounce happened in June, I want you to see what was happening with yields. Falling. But instead, yields are flying. And I got to be honest, guys, if you showed me this chart of yields and based on the previous action before this most recent move up, and you asked me, guess where SPY is at? SPY is at 330 right now, based on price action of yields and how we've been trading correlated to the market. SPY's at 330. But here we are at 374. These are things that I pay attention to and listen in the stock market. It's a major divergence, major divergence between what's happening with yields and the equity market. If yields start to come down hard, what do you think price is going to do? So keep that in mind. Now, with all that being said, is there really anything that I'm really interested in going into the next week? Well, I want to show you guys. We're along AEHR. AEHR gave me an entry above this high here, this pivot, got long, shook me out. AEHR then gave me another entry above this pivot, got long, shook me out. Is this a buyback signal? This bar right here? Yes, it is. The unfortunate thing is that's a pretty big, wide engulfing outside of an ATR move. You give me this candle, even that candle, or this candle preferably, right here, and I'm back in AEHR. But guys, guess what? I've been shaken out of this one. And since that first entry, AEHR is still working, and it's up 37%. The initial logical, rational stop is this low right here. If I get long above this pivot right here, my final cut loss is here. AEHR never ran that stop, so why don't I have a position anymore? Welcome to the current market. I'm more interested in protecting and preserving capital than hitting these winners. For every AEHR, I have about 50 names that I've gone long that have barely worked or not worked. So I'm showing you the outlier, the exception, not the norm. But it's good to see that leaders are still acting right. So AEHR, since getting long, is still acting right. I just mismanaged my position due to the overall market. Am I upset? Absolutely not. That's the way this market is. MODN is another stock that we went long here, hitting a new closing high following the end of today's session. And CC, one of the best setups right here for a small cap, because it was right at its 200 SMA when it gave me the signal with a positive shake and money flow. That's hitting a new price high. Still, everything looks good here. So there are some bright spots out there despite this overall market. It's just going to be a tough sled, guys. Can't expect too much. And I wouldn't go heavy. And I modulate. Let's say I normally risk $1,000 per a position I enter. In this tape, I might be risking only 200, 100. But let's say that I risk only 200 on a trade, and that trade fails outright. Okay, pull it back to 150 risk. Let's say that that trade fails outright. Pull it back to 100. Let's say that that trade fails. Pull it back to $75 risk. That trade fails, $50 risk. Now that trade works. Okay, I'm going to push it back up to 100. That trade works. Okay, 150. That trade works. 200. That trade works. 400. That trade works. Back to 1,000, and so on and so forth. That's what good poker players do. That's what good stock traders do. If you're taking your trades in signals no matter what the market condition is, you need to modulate and adjust your size to the market and or take only the best setups. Right now, I can only take grade B and grade A setups, and my grade Bs are not really working out, so I have to keep them small. And I'll continue to keep them small until the grade Bs work and or until I get a grade A setup that I can really push size. But right now, we just don't have that. So going into Monday, my long-term portfolios are waiting for SPY 350 or a Fed pivot. My quarterly portfolios are still 100% cash. They are going to get to work in November, but I think it's just going to be 50% of the funds. My CANSLIM positions account is 100% cash. My CANSLIM swing account has only 2 longs in it, and I believe it's right around 25-30% invested total with just those 2 longs, DVN and TNK. The end-of-day swing trades portfolio is about 95% cash, 5% longs with very tight stops. And, of course, the day trading accounts this week. I was green for the week, but I missed some amazing setups, and those break-even stops are causing me to miss out on some pretty big gains intraday. Should I remove them? Maybe, but I'm not willing to do that just yet. I don't have a good enough market. So do I have any trade ideas for everybody for the new week? I got 2. On the CANSLIM swing side, CRBG, I really like this stock. Has a 99 EPS rating, has an 89 relative strength rating, a 96 composite rating, sales growth over 40% in the most recent quarter, earnings growth over 100%. 2023 estimates is for a 36% increase. This is a clear IPO base to me. My game plan on Monday is to get long with the breakout above the high of the day on Friday. I have to adjust my position size to risk to this low initially, just in case it triggers, fills, and then spectacularly fails. I got to protect myself. But if I get filled, even though I'm positioning my size from this high to this low, My final stop, if I get filled, will probably be right here. In a good market, I risk all the way down to here and I let it work. In a kind of iffy market, maybe I have a third of my stops here, a third here, and the final third here. In this market, if I get filled in CRBG, CANSLIM quality swing, that will be my stop. But I'm sizing in from this high to this low. Whatever dollar amount I'm okay risking is the dollar amount I'm going to put to work from this buy stop to this sell stop, but will only risk to there. And then on the swing side, I really like this stock. IIPR off the lows, had a volume truncation setting, or volume truncation day on Friday compared to all the volume bars going back well over a year. It's a nice move off the lows. The 50 SMA is flattening out. The 9, the 5 is above the 9, above the 21. They're all trending in the right direction. I think this offers a pretty solid risk-reward trade setup off the lows. IIPR has a 97 EPS rating. I really like the sales and earnings growth. It's maintained over 30% EPS growth the entire downtrend. It's maintained over a 40% sales growth the entire downtrend. Maintaining that 97 EPS. I would like to get long IIPR above Friday's high, risking to this low. Now, in a good market, I give it room to work all the way to this low. In this tape, though, if I get long, I'm risking from this buy stop to this sell stop the exact dollar amount I'm okay to lose. But if I get long, I will not hesitate to cut, a third here. Then I'll have a third stop here, and my final stop will be here. And that's how I will be playing IIPR in the coming week. Okay, so it looks like that's all my bullet points, so I am done. If you guys learned anything in the video lesson or found it beneficial, show me some love. You know what to do. If you guys would like to see these video lessons every single evening, Monday through Friday, I have links in the description box below. And that's it. Have a wonderful rest of your weekend. Great luck during the upcoming week. And I'll see you next weekend.